Hi, it's a brand new quarter, but the same old market factors are driving the U.S. currency toward new highs. Welcome to the Travelex Weekly Outlook for the week of October 3rd. We have seen the single currency come under renewed pressure once again. In fact, now it's at 8.5-month lows against the U.S. currency. This came after Athens in the early stages of October said that it would likely miss its projections for lowering its debt load to a certain percentage of GDP. That was a precondition, really, for it to continue to receive payments from international creditors. So as a result, that has really darkened the outlook for whether or not Athens has done enough or is willing to do enough to continue to earn these quarterly installment loans from its international creditors. So as a result, we have seen the single currency push to new lows. It's now at 8.5-month lows against the dollar. The U.S. currency has also touched 8.5-month highs against a currency basket. For the greenback against the Canadian dollar, it's now at its highest level in 13 months, while against the Aussie dollar, the U.S. currency is at its highest in 10 months. The previous week, that was really emblematic of how the U.S. dollar performed during the summer quarter. We did see the dollar turn in one of its strongest quarters in quite some time. In fact, renewed worries about whether or not the global economy will tip back into recession, as well as escalating concerns about what's going on with Europe's debt crisis. That did lead investors to reach for the safer U.S. currency. And as a result, they did unload riskier stocks and higher yielding currencies like the euro and even the Australian dollar. So those global growth worries, that did push the euro down some 7% against the dollar in the September period. In fact, that was good for its weakest performance in 10 months. But for the dollar, it wasn't all rosy news. In fact, we did see the U.S. currency lose some ground against the Japanese yen. The dollar for the third quarter, it did lose it lost more than 4% against the Japanese yen. That put it on pace for its worst quarter since the summer of 2010. But for the coming week, for the week of for the first week of October, we're going to have a handful of market events. For example, there's going to be a raft of central bank meetings out of the UK, the Eurozone, and even Australia. So market players will really hone in on that. All three central banks, however, they are expected to hold steady on policy. But in the case of the Bank of England and the European Central Bank, there is some chance that they may loosen monetary policy. If they do, that would tend to put downward pressure on the UK pound and the single currency. But even if they don't, I think a lot of market watchers expect these central banks to offer dovish guidance for the outlook for monetary policy. So even that still can keep pressure on the UK and Eurozone currencies. For the week ahead, it's really going to hinge on how the U.S. economy performed during the for the month of September in terms of the employment report. That is going to be the key focus. The U.S. Non-farm payrolls report for September. The U.S. economy likely tacked on 60,000 jobs for the month of September. That would certainly be an encouraging step in the right direction after the economy didn't even register a single overall job for the month of August. But still, even 60,000, that would come up well below the more than 250,000 jobs that are needed to be created on a monthly basis to help put a dent in the high unemployment rate. But that's going to do it for the latest on the dollar. Feel free to check us out online.